you are one of the amazing finance people because you are at the intersection of not being full hardcore Bitcoin maxi, macro, or like even worse, a crypto degenerate in there. And you are also not fully like a TradFi guy that kind of shits on Bitcoin. So you're kind of in the perfect middle. What is the most interesting for you currently in this intersection between TradFi and Bitcoin that you're currently seeing?
Yeah, I appreciate it, man. So I've just been really pounding the table on this concept of Bitcoin personal finance. And the reason why it has to be Bitcoin personal finance is because here on YouTube, the like regular personal finance still views Bitcoin as kind of just speculative and random. And then the Bitcoin only sphere kind of is just so wrapped up in like macroeconomics and like the institutions, like that doesn't apply to regular people. And then the crypto generalists, they still are just kind of interested in day trading, and it's just is so focused on what's the little bit of news tidbit about the certain ticker and the timing and like whatever of that. And then a very, very small amount of people are starting to come to my channel from Dividend Snowball and like Financial Independent Retire Early, like kind of channels. And so this is it. It's the first time on YouTube and personal finance in general that I've seen like a path to Bitcoin people and dividend income investors and like financial independent retire early people, kind of like index fund maximalists, like really almost coming together. Like they're as close to talking to each other without talking past each other as they've ever been. And so just really trying to continue to talk at the intersection of that.
Yeah, I've also seen that you're kind of trying this whole income investor versus being a growth investor out. What's been this transition for you? Like, what's kind of your thing with income versus being a growth investor?
Yeah. So I think it's funny that it runs deeper than we all actually know that it does. And one place where it continues to come out is this concept of like the 4% rule versus like having income to cover each bill. And because there's the camp that's like just drive the top line number up as high as possible, drive your top line portfolio up as high as possible, and then the spreadsheet will tell you, what your monthly income is at the 4% withdrawal window. And then those people will kind of say that if you're income investing or you're dividend investing, that dividend funds like structurally underperform growth. And then the dividend guys, I think, just see it as and this is why I lean more towards the dividend side. It just feels like a cash flow thing. Like I've been a personal finance nerd my entire life, and if I was to nail down what I'm like best at, it's cash flow. I think I'm an okay investor. I think I'm like okay at increasing my income and like living below my means. But my best thing, my genuine best thing is like managing just money coming in and money coming out. And I talk about how your portfolio is a battery. You can run it up and run it down. Your credit lines are a battery. You can run it up and run it down. Your Bitcoin is a battery. Run it up and run it down. And it's almost like people like I'll get into conversations with people and they are so hyper focused on like driving their top line portfolio number up and then figuring out the 4% rule, but they've never like taken half a day to figure out that they actually could get a home equity line of credit on their house for like 7% or something. Like and so I'm just a big advocate for cash flow. And so my brain, when I think about quote unquote retirement, I think about matching up income with bills. And one more point on this, the reason why I also believe income investing beats the 4% rule, broadly speaking, is because it's just more flexible. I don't think we're in a world where you like work and then retire. I don't think it's that bifurcated. I think there's many phases, and I think more and more people are kind of tripping over financial freedom and just kind of like you slow roll realize that you're actually there, and you'll always have a little bit of income and a little bit of working income, a little bit of income from your investments, and then you don't have to sell the full 4% withdrawal. Your portfolio can kind of just like tread water, and you can kind of sell off of it to like round out the gaps.
How do you do your portfolio these days? I think like income, do you mostly use Stretch, or like you also go for other products outside of the ecosystem?
Yeah. So I track my income portfolio, which I started in September of 2025. So if people go in my YouTube description, they can find the live portfolio. And yeah, it's like 50% Stretch right now. It's like 50% Stretch, probably like 30 to 40% BTCI, and then which is a Bitcoin covered call fund. And then the remainder of it is I've been leaning more into cash and Bitcoin spot ETF, because my timing of getting into BTCI was back when Bitcoin was around 112,000. So if you look at the BTCI position itself, I mean, that's rode down the entire move down from 120 to 60. And so yeah, a lot of Stretch. And I don't yeah, I have a hot take. Okay. I'm not bullish on strategy common stock. Okay. I'm very just neutral. I genuinely don't know. I genuinely just don't. The whole like MNAV discussion and like accretive dilution, I don't know, guys. I just don't know. I'm just very like I went to the strategy world in Vegas. I was there for just the True North day. Um I love Stretch. I love Stretch. Like people can see my tweets about it, see the YouTube videos about it. I personally own a lot of it. I totally understand how that's the tip of the spear of, and I like the concept of the Bitcoin yield curve, all about the Bitcoin yield curve. Bitcoin treasury stock, common stock themselves being like amplified Bitcoin and growing faster than it. I don't know. And so I own like a very small amount of strategy inside a Roth IRA, but I don't like you. There's no treasury common stock as part of my growth or income portfolios right now.
But wait, what was the other 20% in the income? It was like Stretch,
Cash,
BTC.
spot Bitcoin, spot Bitcoin ETF.
Oh, okay. That's like,
Yeah.
but it's okay. It's like a part of the portfolio, but not really income producing, right?
Exactly. No, exactly. And I was saying and the reason why I've done that is because I've like sacrificed a little bit of the income on the covered call funds and on Stretch in order to try to regrow the principal, because my principal did take a hit during the recent Bitcoin downturn.
Ah, interesting. And outside of that, it's like this is. I mean, we don't have to get into all your portfolio, but I'm just curious how you set it up.
Yeah.
Because like this is like your income thing. You have a separate growth portfolio, or
Yeah. So yeah, but I would just call it like my Bitcoin savings. I don't have another brokerage account where it's like some blend of NASDAQ and Bitcoin. No, it's just Bitcoin. Like, it's just Bitcoin. And so I basically like, I talk about the whole legs of the table. And I talk about this is like, so we have our Bitcoin, our on-chain Bitcoin savings. We have our income portfolio, which is a mix of Bitcoin growth and monthly income. And I'm withdrawing that to our joint checking account. Like that's like actual living bills money. We have 2 rental properties. And so those have our mix of income and growth. And my wife and I both work. And then and then the last one is I'm starting a Walmart wholesale company right now, where we buy wholesale inventory, because Walmart's trying to compete with Amazon, and the majority of Amazon traffic is third-party sellers. And so Walmart has the same sort of third-party seller marketplace. And so I've made a pretty significant investment into like wholesale inventory, and I'm going to continue to kind of compare that to the stretch returns and to the BTCI returns and kind of decide what I want to do, what I want to lean heavier on.
It's super interesting because you now have so many options just in the Bitcoin ecosystem. I mean, Stretch kind of opened the floodgates to you having more options, because before it was like Bitcoin. You can get some altcoins, but I always kind of looked at them as shitcoins and scams. Then of course you can go full hard in TradFi, which like what dividend, what income do you get from that?
100%. And honestly, I want to say the same thing. How I gave my opinion about like Bitcoin treasury stocks. I feel the same way about regular stocks too. I don't love the idea. I don't love the idea of being tied to a CEO or a board or anything right now. Like I kind of have like drank the juice on the world is changing very quickly. The world is changing very quickly. If you've used OpenClaw, if you've used Codex, if you've used these things, like I just don't I'm not sold on CEOs being able to turn the giant ships that they are in charge of. And Stretch, if I see Bitcoin is competing with the S&P 500 more and more, it's the Bitcoin as the index of the world or the S&P 500 as the index of the world. And if Stretch, the reason why Stretch is so like interesting and so influential is if they can grow the preferred stock market and the amount of companies that issue preferred shares, it's going to make dividend stocks more popular. And so if you're a company, public or private, and you're not paying a dividend, or if you're not growing faster than Bitcoin, then what are you doing? You're just stuck in no man's land. And so I'm not super confident on the amount of companies, Bitcoin or not, that are able to like I think there's gonna be a lot of people stuck in no man's land. And so I would prefer to be in income and Bitcoin.
It's very hard for me to currently invest in Stretch, and it's enticing, but it's also I have my things with that. Like first of all, like I have my business and like I have the income, and so I think for people that have income and that's sufficient and they like, especially if they like what they do, I'm not sure if like Stretch is amazing, but maybe you can change my mind. My thinking is, if like Stretch is only really possible if Bitcoin is outperforming Stretch. Like otherwise, Stretch will at some point like no longer work for strategy, I think. And so like if we have the basic assumption that Bitcoin itself is outperforming Stretch by whatever margin, I look at the next 10 years at Bitcoin performing at around 25% CAGR. I know Saylor puts like a 30% CAGR there. There are people that get more aggressive than that, but I like to be a little bit on the conservative side with like 25%. If you take 100K and like easy math, because I like I had that calculation already. If you put 100K into Stretch for 10 years, you get roughly like 250,000 with a 10% yield on that. Maybe 280, maybe 290, depending on like if they get like 11 or 12% yield. If you take it with 25% CAGR, you get roughly like a million, like 900,000 to 1.1, like depending on what exactly numbers you put in there. So like it makes a huge difference between like 10% and like 20%, especially if you look for like the growth of the portfolio. But the income is enticing, you know, like the having this like just like monthly paycheck that keeps on getting no matter what you do. And it's like very nice. And I know a lot of Bitcoiners are very into retirement. They just like they hate their job, or maybe they don't hate the job, but they just want to get out of the job and have financial independence. And I think retirement, I think we already covered the topic a little bit, is not doing nothing, but doing what you actually like to do. So I have that like those two sides in me. The logical one, like I want to get the 25, 30, 35% CAGR and have the way high upside. But also the monthly dividend check, like the paid thing is like kind of very enticing. Currently, I'm only Bitcoin and strategy and not in Stretch, but I'm like more and more I'm thinking of like slowly building a small portfolio of like also Stretch to prepare.
Yeah. So no, I think your logic and reasoning on all of that makes sense. I think where I would I think I'll comment on a few things. I think you're exactly right that the first thing is like, how much do you already like your income? How much do you are like, you're already a business owner, you already like what you're doing day to day. And so no, that makes like a huge role. And so you being able to like have the barbell of like a company that you really like running day to day, and then the growth and the Bitcoin volatility because you already have your cash flow fixed over there, I think makes a ton of sense. I think I would say that to your comment a little bit back about how there's way more options today than there used to be. Yeah, like the only options back in the day were how much Bitcoin do you hold, how much USD do you hold? Like, and that was it. It was, and that was the constant debate. The constant debate was, well, you know, how much Bitcoin do you hold, and then how much USD do you hold, and then like, well, should your emergency fund be in USD or should it be in BTC? Like, is because there is no because there's only two sides. Now you literally can when you factor in all of the strategy products and the Bitcoin covered call funds and like Bitcoin itself, you basically can recreate the S&P 500 volatility and income. You could recreate the NASDAQ volatility and income. You could recreate any index that you want simply using Bitcoin. And so that is beautiful that everyone can like make the ratio on their own. And so I see stretch as I've talked to some people where they're like, hey, I don't have any stretch yet, but I'm like DCAing aggressively like the S&P 500. And I'm like, well, okay. I mean, I own stretch instead of the S&P 500. And then it's like you and how you're saying like, hey, like I own my own business and like that pays me monthly instead of like stretch. I was like, yeah, that makes a ton of sense. I think that the only other thing would be whatever layer you use like a high yield savings account for. I think more and more the high yield savings account, like overfunded emergency fund, is gonna be the stretch money for people.
Yeah, that was kind of the next question I was going to ask you, like how much cold hard cash you still hold if you already have money in stretch that you basically can liquidate at any point. Like it's just like the likelihood of stretch going to zero, I count as like very low. Like that thing just imploding. The likelihood of that is obviously not zero, but about as low as the US dollar imploding, maybe a little bit lower than that. So like, do you still hold like cold hard US dollar or whatever local currency?
Not a lot, no. And it's not for any ideological reason. It's more just like because I'm like I've talked about this on the channel too. Like I DCA my like lifestyle pretty hard. Like the money that comes in goes out. Like we are really focused on making the day to day like comfortable right now. And so no, there's no the stretch position is our overfunded high yield savings account emergency fund, and the actual operational checking accounts are very minimal.
You said DCA in your lifestyle? Or
lifestyle.
Like,
yeah.
what do you
I've been
mean?
starting to say that more. Just like, dude, just buying stuff, buying cool stuff. Like owning cool stuff is cool. Like, and I don't, maybe this is like projecting, but I had this issue growing up where it's like owning nice things was like seen as like just such like a hand wringing like thing. Like, oh, like, should we do it? Should we not do it? I'm like, no, like owning nice things is really nice. And this is my issue with the Bitcoin community sometimes too. It's like where they're like, oh, sell your chairs. And I'm like, no, like Bitcoiners should have the nicest chairs. That doesn't make any sense. Like that doesn't make any sense. And I'm tired of these like dumb bumper sticker statements in these like jokes. I'm tired of it always being a joke because I don't think it's a joke, man. I think it's cool and interesting that Bitcoin has led to financial freedom for so many people. And I don't think it's talked about enough.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.